The world is changing fast, and so are the local real estate markets. Don't worry, though. We've got you covered. Welcome to the Real Estate Revolution.
This is the Real Estate Revolution podcast, and I'm Kip, your host. And for those of you out there that have been our best fans listening to our show every week, we apologize for being on hiatus for the last several weeks. But this latest show, this new show, will make up for all of that because we are going to dig right into what's going on in the Bend, Redmond markets and the Eugene, Springfield markets. And since there's been some time since we've had our last market report, there are some really interesting numbers and interesting trends. We are definitely seeing some shifts in the Bend Redmond market that we will talk about. But before we get into that, I want to, of course, introduce my co-host, Ryan Neal. How you doing, Ryan?
Doing great, Kip. It's good to be back on the Real Estate Revolution. It's really too long. I've missed doing the show.
Me too. I mean, you went to Spain, and I had my part of the hiatus. So between the two of us, we kind of had to step back from the show. But I am excited to get back to it, and we promise we are going to be back on our weekly basis with great information for our folks out there and some really fun stuff. And also, just kind of a side note, we are going to change some formatting a little bit. We are going to include a local business focus segment to our show every week, which will focus in on local businesses and what's going on with them. This is part of our lifestyles portion of the show where we're really going to feature kind of why Bend and Redmond is special, why Eugene Springfield special. And part of the reason that's special is through all the local businesses that are providing, services and food and all kinds of great support to the community. And so starting next week, we will have that as part of our weekly programming as well. So anyway, Ryan, what have you been up to? I mean, it's getting kind of hot out there, right?
Yeah, we've been hovering just a bit under 100 degrees here in Eugene for 4 or 5 days or so, and that's scheduled, it looks like, to continue through the week. So, this is kind of some unprecedented heat that we're seeing here in Eugene, Springfield.
A little bit, and I am in Bend currently right now, and we have been experiencing a version of what you guys have had there in Eugene, and it looks like later on in the week, at least for us, we're going to see some cooling down and maybe even some thunder showers. But I'll tell you, it hasn't kept people from getting out and enjoying what's really special about our two communities. Wouldn't you agree?
Yeah, definitely. This is really the time of year in the Eugene Springfield area where we get almost no rain, which is a shift from
the
many of the other parts of the year. Yeah, so people really do take advantage and continue to take advantage. It's just important, folks out there, stay hydrated. That's key.
Yeah, hit the river. I mean, this is one of the best times to hit the McKenzie or hit the Willamette River there in your area right now. And then people are on the Deschutes en masse right now. In fact, I was in the river yesterday and planning to hop in the river again later today. But that's probably enough of you and I bantering about lifestyle stuff. Let's get into what has been going on in our markets. And just for those of you listening, we're going to split the show today in two. We will talk about the Bend Redmond markets first. We'll take a little break, and then we'll jump into the Eugene and Springfield markets. And I think through our conversation, you're going to see there's kind of a tale of two different markets going on right now. And, what has been going on with the interest rates going up and what has been going on in the economy, I think, is really starting to, show signs of stress, at least here in the Bend Redmond market. Wouldn't you agree?
I would certainly agree. I mean, that has been the big story, when it comes to real estate markets all across the country. People have been forecasting and experiencing a slowdown in many, many markets across the country. But as we like to remind everyone, real estate is local to a degree, which few other kinds of markets are. So, we really need to go into the specifics of what's happening in our local markets for you to really have a good sense of what's going on. So that's what we're going to do.
Yeah, that's right. So why don't we start out talking about interest rates and what they are doing right now and how that's, a stark difference to what we saw even a month or two ago.
Well, for 30-year fixed-rate mortgages, conventional financing, we're seeing a rate of 5.99%, so just under 6%, 6.08% inclusive of fees, APR.
Yeah, and we were seeing earlier this year in January and February just below 3%, so that is a huge jump just in 6-month period of time.
It's a huge jump, and it makes a huge difference in terms of purchasing power, especially when, as we'll see, prices aren't particularly going down in either the Bend, Redmond, or Eugene Springfield markets.
Yeah, which I think is a reflection of, even though we're seeing an increase in inventory, it's still, historic low inventory.
Yeah, definitely. Particularly in the Bend market, we are starting to go back toward, inventory levels, which are more in line with what we were seeing in, say, 2019, 2020, before the pandemic happened anyway.
Right.
But in Eugene, Springfield, definitely inventory levels are still close to historic lows.
Yeah. So why don't we get into some of the numbers here in Bend, just to kind of give people an idea of what we're seeing right now on the ground?
Yeah. So when we talk about real estate market data, it's important to kind of make distinctions based upon when the data is coming in. So if we're talking about closed sales, then those are sales that obviously went into contract, usually one or even 2 or more months beforehand. So when we look at the numbers for closed properties, what we're really seeing is a snapshot of what the market looked like a month or 2 months ago. What we're seeing in Bend as far as closed sales is a median sale price of $770,500. And that's actually up from the numbers that we saw in June,
Wow.
showing that
there's still activity.
There's still activity. People are still paying top dollar for properties in Bend, and they're still going off the market relatively fast. We have a median days on the market of 10, which is up from what we saw in June, when median time on market was 7 days, but it's not the huge increase that many agents are starting to experience in Bend right now.
Yeah, and I, just anecdotally, so what I have been seeing is there has been a lag of listing agents and sellers kind of understanding that the days of asking the buyers to write a blank check are kind of over. Buyers are more willing to push against their price. We're seeing price reductions here in Bend much more common than we saw even a month and a half or 2 months ago. And I think when you share the pending numbers with us, you're going to start seeing kind of those days on the market and that kind of dynamic really starting to reveal itself.
Yeah, so the data we have for pending sales is reflecting properties that went into contract during the first 3 weeks of July. So with those properties, they spent a median of 22 days on the market, which, if you think about it, it's a pretty incredible jump in just a short period of time.
Yeah, no, that's absolutely true.
And we're also seeing prices that are a bit low. Of course, we don't have the sale prices yet because they haven't closed.
That's right.
But these properties that went pending were listed at a median of $749,000. So that's a few percentage points drop from the closed sales that we saw. And also, it's good to point out that properties in Bend are now selling for an average of about 2.2% less than their list price. So, when the next round of closed sale data comes in, it's probably going to be a bit lower. It's probably going to be closer to $740,000.
Yeah,
so.
I think to help people understand that number, what we're seeing is price reductions happening. So you'll have an initial list price of, let's say, $800,000, and then we're seeing price drops, as much of $100,000 off of that original list price. So this pending number that you're giving with the 22 days on the market, is reflecting enough time on the market that sellers are getting like antsy to get their places sold, and they're responding by doing price reductions relatively quickly, which here again, we're not in normal market mode. In a normal market, we might see some price reductions, but we're not going to see them that quickly within a 22-day period. So it'll really be interesting to see over the next couple of weeks how these pending numbers start to really shake out as far as days on the market. And then, like you're saying, where that sales price, if we start seeing that trend down a little bit.
Yeah, I think it's very likely that we will, because, this is really a big shift that is happening in Bend right now, where I really think that Bend's market has reached this tipping point where we now have 2.3 months of inventory. Last time we checked, there were 680 properties active on Bend's market. So that's a fairly big jump in a pretty short period of time. So it is going to have a big impact on the market dynamic. And I think the problem for a lot of agents is that they're relying upon data, which is a little bit outdated.
That's right.
To really get a clear idea of what's happening in the market, you have to be really drilling down into the nitty gritty, not just looking at closed sales, but going into the pending sale data, looking at what's on the market right now, how long your average property has been on the market.
Yeah, and not all agents out there are doing multiple deals a month. And so when you really are looking at the market through the lens of a deal or two, it's hard to get a grip on what's really going on. And I think, we're seeing the same sort of the mindset not keeping up with what the market's doing when we saw it going up. Appraisers were having a hard time keeping up with what was going on with buyers willing to pay, $100,000 over list. And this was only happening 2 or 3, 4 months ago. People were still paying a significant amount of money over list price. So we're seeing the converse side of that. Things are changing rapidly. Those interest rates are definitely affecting buyers' behavior. And I think the professionals in this market, not all of us are able to kind of keep our fingers on the pulse and really be reactive or responsive to it.
Yeah, and also another important thing to mention is that it really is dependent on the particular type of property that is being listed. Some types of properties are still going to be almost just as much in demand as they were when Ben's inventory was about a half a month late in the winter.
Yeah, that's right. So there are, I call them unicorn properties, where there's just either no other property like it, or there's very few like that do come up through the course of a year. And so you're right about that. We just sold one recently that was fit right into that category. But even with that property, they got list price. They didn't get over list price. They were off the market in 7 days, which is, still pretty quick. But we're not seeing, even that unicorn property was not seeing multiple offers and a bunch of people banging down the door and driving the price up. So things are shifting quickly. And I think for those of you out there, really highly encourage you to tune in every week to listen to our weekly market report, because we will see movement on a weekly basis. Wouldn't you agree, Ryan?
Yeah, certainly. We are going to start seeing the landscape shift in a pretty noticeable way.
Yeah. So what else is going on in the Bend market that you think really people should be aware of right now?
Yeah, so you mentioned, this property that we had recently sold that, as you mentioned, there was only a single offer. It was off the market in 7 or 8 days. So relatively quick sale, but didn't have a bunch of buyers knocking down at the doors. And we did have this short window of time in Ben's market where there was an unusual degree of competition for luxury properties.
Yes.
And we are starting to shift back toward more of a situation which matches the historical norm for Ben, which is that, yes, there's a big luxury market, but that means a relatively high inventory of luxury properties, spending, typically a fair amount of time on the market.
Yeah, and I think that was the biggest surprise for me. And I know you and I have talked about this off air, about how I had initially thought interest rates were really going to impact the Eugene Springfield market much more dramatically and quicker than it would affect the Bend market, having the reality that the first-time home buyer market in Bend just doesn't exist. When you've got a median home price of $770,000, that's not the common Joe that's working in Bend that's going to be able to afford a home in that price range. And so I thought that interest rates were not going to be that impactful for the people that were looking for second homes, or maybe they're getting ready to buy their retirement home and come here and live full time. But a lot of these people that are it's funny, when we talk about the luxury market, when we talk about $1 million or $1.2 million house, that's a luxury market price point in Eugene, but that's really not, you're not pushing into a type of home where it's the lifestyles of the rich and famous at $1 million anymore here in Bend. And so a lot of people are still getting financing for their second homes and even for their retirement homes here. And so I underestimated the impact that the interest rates going up would have on kind of that second tier, or that second home market has really slowed down, because a lot of people here are not able to rent their homes out when they're not coming and enjoying them here while they still live from out of area. And so it gets expensive in a hurry when you're paying 3% more in interest than you were even 4 months ago.
Yeah, that's a good point. And as kind of an aside, we mentioned the 30-year fixed rate mortgages as being just under 6%. But interestingly, 30-year jumbo loans are now at an average rate at 4.875%, so significantly lower.
Wow.
So this could actually if this trend continues, this could actually have a measurable impact on, like you're saying, these homes that you definitely are going to need a jumbo loan for, but aren't quite at the range where an all cash sale is going to necessarily be the norm.
Yeah, that's right. And I think one thing I'd like the listeners out there to understand is this is not an indication, in my point of view, that we're going to see some great downturn in prices and huge price pressure to go down. I think we're going to see our market stabilize by the end of the year. We saw it go up dramatically. I think we're seeing it flatten out dramatically, but I still don't feel like, based on the continued exuberance in the number of buyers that are interested in coming to the Bend area, having us see the prices drive down significantly. The national headlines love to throw out that there's these communities, and Bend is definitely one that comes up in the national news as the most likely for prices to dramatically go down. But I'm going to serve on this and say that I don't think we're going to see dramatic price drops here in Central Oregon.
Yeah, and as dramatic as the increase in inventory in Bend's market is, we're still quite a low inventory market. 2.3 months does not by any means qualify as high inventory. In
That's
fact,
right.
It's still low. And what we've seen so far in July is that listing activity has actually dropped a bit. In May and June, we had a bunch of people listing their homes to kind of try to take advantage of this kind of last hurrah of fear of missing out that buyers were experiencing, who had been trying to purchase a home in Bend all through the winter when inventory levels were incredibly low, and were still bringing that same kind of attitude to the offers that they were making leading up to now. So it's definitely a different situation now, but we're also actually on a bit of a downward trend in terms of inventory increases right now, at least.
Yeah, and I would say we're seeing kind of that seller FOMO starting to happen, where a lot of sellers are feeling like maybe they've missed out on the top. They are getting ready to retire or have retired, and they want to move out of the area, and they were kind of waiting for that sweet spot to hit the top of the market. And I think part of the increase in inventory is we're just seeing sellers being like, wow, if we don't get out of the market now, we're not going to take advantage of the peak.
Yeah, that's true. So it can definitely go both ways.
Yeah. So what's going on in Redmond right now? The sister city to the north, historically, prices trend lower. In the case of our current market, significantly lower, but they're still expensive by national standards. And what's going on in Redmond right now?
Yeah, so in Redmond, we're kind of seeing a mirror of what's happening in Bend as far as time spent on the market. But in terms of price decreases, we aren't actually seeing any of that happening on the horizon, unlike in Bend. Closed sales so far in July have had a median sale price of $530,000, whereas pending sales, those had a median list price of $549,000. So even if they sell for a bit less than that, we're still seeing this upward trend in terms of prices. And Redmond's inventory is also significantly lower than Bend's. There are 1.6 months of inventory right now, total of 192 properties active on the market right now.
Wow. Well, so there's still some exuberance in what we would say maybe more traditionally the first-time home buyer market, where there's still, low inventory, the interest rates will go up, but people are still buying up there.
Yeah, and I think it's totally about the price point of these homes that are up for sale in Redmond compared to Bend. It's becoming more and more rare to find anything whatsoever below $500,000 in Bend. So that market has really shifted to Redmond, and as a result, it's just been a bit more active than what we're seeing in Bend.
Yeah, so it's in some respects, it's more in line with what we were seeing in the Eugene, Springfield markets. Would you agree?
Yeah, definitely. If we're ready to go into Eugene, Springfield, we can dive into the numbers. What do you say?
Yeah, well, why don't we take a break, and when we come back, we'll dive into the Eugene, Springfield market. And, I think listening to the show with the markets back to back, you're going to really be able to see a numbers difference for sure. But for those of us that are working in both markets, it's palpable. We can really feel the difference in the two markets. And so when we get back, we will hit the Eugene Springfield market.
Sounds good.
Welcome back to the Real Estate Revolution podcast. I'm Kip, your host, and I have Ryan Neal in the studio. He's in our studio in Eugene, but we are back at the mics giving you the truth of what's going on in the Bend, Redmond markets and Eugene, Springfield markets. And we've been talking about kind of an extended market report. And so for this purpose, we're going to jump right into the Eugene, Springfield market. So where do you want to start, Ryan?
We might as well start with closed sales in Eugene. And again, the data that we're talking about reflects sales from the first 3 weeks of July.
Sounds good.
So median sale price has been $470,000. So that's right in line with what we saw in June. And these homes are going off the market in a median of 6 days. So still under a week, still very fast.
Yeah, and they're selling for almost 100% of list price. So there's not a whole lot of price reduction going on right now.
That's right. I mean, as recently as June, homes were still selling well above list price in Eugene. They were at a little over 2% on average above list price.
Oh, wow. So it's come down a little bit.
So there is a shift that's happening, but at the same time, listing agents and people who are selling their homes are still setting very aggressive prices, and the average number for new listings keeps going up every month. So in the first 3 weeks of July, the median list price was $504,000. So that's the first time we've been above $500,000.
Yeah, that's amazing.
Yep. And pending sales, first 3 weeks of July, were listed at a median of $479,000. So prices are going to stay right up there. And these listings, unlike in Bend, Redmond, did not spend significantly longer on the month. We have a median days on the market of 10.
A little bit higher than what we saw for the sales, but we're still talking about getting off the market very quickly.
That's right.
Yeah. Well, so I think, one of the things that comes to mind for me right now in Eugene is that many of the same strategies that we're using for buyers and for our sellers are still holding true, where we're still seeing some multiple offers. We're still seeing properties go off the market pretty quick, but maybe there's just a little shift of gears of, you don't have to give your firstborn child or your riding lawnmower to get a deal done right now.
Well, in Eugene especially, there are still going to be particular kinds of properties that are going to attract a lot of attention. So it's not like bidding wars are quite a thing of the past here. But when it comes to homes that are less special in terms of their location, their level of finishes, et cetera, they're tending to find buyers relatively quickly, but it's not going to be a multiple offer situation like was almost the default in the winter and early spring.
Yeah, so I think that for both buyers and sellers in the Eugene Springfield area, particularly the Eugene area, I would say heed what's going on in Bend and Redmond, because I think we're going to see a similar impact as we continue to see interest rates go up. And so for listing agents and for their sellers that they're advising, starting to be more cautious about getting too aggressive on your price points now so that you don't get caught on the other side of it. What we've seen a lot of in Bend is sellers overshooting on price and, then having to come down aggressively on price and be on the market longer, which then gives buyers, they're more aggressive about pushing back on price, even as you've reduced the price. So my advice to sellers out there right now is try to stay in line with what the market's doing, but don't get too aggressive. You're not going to leave money on the table by being spot on with your price. Once you start doing price reductions, the blood's in the water and folks are going to start taking advantage of you. And I think your net is actually going to be lower if you start too high. And, Springfield's a little bit of a different story. They're still very, very quick off the market and not very much inventory as well.
Yeah, I mean, the situation in Springfield is actually pretty similar right now to what it is in Eugene in terms of inventory levels, time spent on the market. So, I mean, actually, more recently in Springfield, what we're seeing for the closed sales the first 3 weeks of July is that those spend a median of 11 days on the market, so a bit longer than in Eugene. But pending sales spend a median of 12 days on the market. So it seems like what has been happening in Springfield is that there's been a lot of activity at the lower end of the market.
Yeah.
So there are less features to distinguish many of these houses at the lower end of Springfield's market from each other.
in noticing the median home prices between the two markets, there's not a huge jump. I mean, it's a $50,000 difference or $49,000 difference, but that's not really a huge jump down if you're going to move to Springfield. So it's interesting to me that, we've seen prices in Springfield become more and more in line with what's going on in Eugene.
It is interesting. Earlier in the year, during the spring, we were seeing a big uptick in activity at the higher end of Springfield's market. But actually what we're seeing right now is that that's reversing a bit. Properties at the higher end of Springfield's market, those listed, let's say, for $600,000 or more, those have a median time spent on the market of 39 days. Okay. And that's compared to 29 days in Eugene's.
So what you're thinking is we could actually see the median home price start going down in Springfield as a result of simply the top end of the market slowing down and the number of sales in that top end being fewer than what we've seen in the last month or two.
Yeah, it really seems like people still prefer Eugene as a destination who are able to afford homes, more toward that
higher end
of the market.
Yeah. Well, so I don't want to feel like we've short-shifted Eugene and Springfield markets, but what's the takeaway? Let's start with a takeaway in the Bend Redmond market, and then let's do a takeaway for Eugene Springfield.
So final takeaway for the Bend Redmond market is that we are really at a turning point right now. The rules of the game are shifting, and it's going to be a tough pill for many sellers to swallow. As a buyer, you're probably feeling right now that there are a lot more choices, definitely, than there were a few months ago if you were in the market back then. But kind of flip side of that is that you may also be hoping for prices to start to drop drastically, and you may really be looking forward to that, or even completely holding off until these supposed price decreases do happen. Yeah. But that's actually may not be the best move as a buyer in the Bend Redmond markets.
Well, I think that's true. And I think primarily for people, interest rates, the Fed just yesterday declared that they're going to still be aggressive on interest rates and pushing them even higher. And so we've already seen a 3% increase in rates this year. There is going to become a point where the rates alone are going to push people out of the market. And one of the things we didn't talk about a whole lot about either market, and Bend has a lot more new construction going on than the Eugene Springfield area does, but new construction is definitely slowing down. And we're seeing new construction properties up until a couple months ago, they were hitting the market and they were off the market very quickly. And we're starting to see them come on the market and linger. And I'm talking about new homes that are done. They've finished their construction process. And this is a type of property that home builders do not want to have sit around. They want them off the market as soon as they can, once they're complete and they get the occupancy permit. So the canary in the coal mine for what I'm talking about here is what's going on in new construction right now, where we're seeing buyers being pushed out of the market. They've been in contract for maybe 3 months while the construction project's going on, and by the time their home that they were in contract with is ready for them to actually close on, they can't afford it anymore because of interest rates. And so we're going to also see that happen in our used inventory markets as we move along here. And so for now, I think I agree with you 100%, Ryan, on, for most people, if you're looking, making the move, you want to get into the market still as soon as you can, because interest rates are definitely going to be the biggest factor as far as affordability right now. And as we push into next year and see how the economy is doing next year, we'll have to maybe alter our opinion a little bit on that front. But for right now, I'm in lockstep with you on, if you're ready to buy, now's the time to buy.
Yeah, and sometimes I think it can come across that we're being a bit too gung-ho, maybe is the word to use, about the market, that prices are not going to go down. And that's, that possibility is certainly on the table. But at the same time, it's not a sure thing.
It's not a sure thing. And when it happens, if it happens, it's not going to be as dramatic as the national headlines would have you think. And so here again, you've got to balance the affordability based on interest rates and price. And the good news for buyers right now is they're not having to chase the prices going up dramatically. We're seeing them flatten out pretty dramatically, at least in the Bend Redmond area right now. And what do you think our takeaway for Eugene Springfield is?
Takeaway for Eugene Springfield is that Inventory is not really going anywhere, in these markets that we've been at extremely low levels of inventory for several years right now, even, preceding the pandemic. We were, getting down right around a month in Eugene, and that's still where we are right now. Not quite as low as we were in the winter and early spring, but it's still super hard to find a home in Eugene, Springfield. And as a seller, you still have significant leverage. Again, it depends on the type of property that you're selling, how much, buyers will be eager and anxious to get into it, how likely you are to have multiple offer situations. So it totally depends on your property, how aggressive, how conservative you want to be in terms of setting a list price and setting your expectations.
Yeah, I agree with that. And, not to bang on the new construction drum too hard, but because we don't have as much new construction happening in the Eugene Springfield area, that really is a large part of why our inventory has remained so dramatically low over the last, I would say 4 or 5 years. And there's not really any end in sight to that because there's not large amounts of buildable ground that have been included in the urban growth boundary expansion that happened a few years ago. So I think for me, I agree with you. The takeaway is we see and will continue to see very low inventory in the Eugene Springfield markets with really little respite from that for the foreseeable future. And having said that, we will also see these two markets remain very competitive and be tough on buyers.
Well, I think we've covered a lot of ground here. Any additional parting words before we wrap things up for this week?
Well, I don't know if they're parting words. I'm just excited we're back in the saddle with mics in front of our faces. I'm looking forward to getting back to a weekly basis for our podcast. And I hope all of you out there do enjoy our show. And we thank you from the bottom of our hearts for listening to our show. And I guess tune in next week for another great show of the Real Estate Revolution podcast. I'm Kip, your host, and you have Ryan. Neal is my co-host there in Eugene, Springfield, and we'll see you next week.
See you next week.
Thank you for joining The Revolution. We are over and out until next week, when we'll continue to fill you in on all that matters most in our local Bend and Eugene real estate scenes. See you next time on The Real Estate Revolution.